Good morning. Welcome to the live stream. Jumping on a little bit late here, which is unfortunate because it's been a big day. I mean, there's big news in markets with Gary Cohn stepping down as President Trump's chief economic advisor. If There's more detail about this in the video edition of Traders Espresso, which I'll be publishing here pretty soon. It's recorded. It's just still processing. The futures gapped down at last night's open at 6 p.m. Eastern Time, which is right after the news had come out. And I'm going to go over, I've drawn some chart patterns and stuff like that. I found some tradable opportunities that we'll go over, a little bit this morning. Markets are off of their lows of the day. The Dow futures were down as much as 425 points, and they've since recovered a lot. They're only down 172. The NASDAQ is down. I'm about to take a short position here in the NASDAQ. The NASDAQ is down 44 basis points. The S&P futures are down about the same, almost 0.5%, and the Russell's doing the best today. Russell's actually up today, 20%. Or 20 points, sorry. 1 second. Sorry, folks, just trying to get my thoughts together here. Maybe when you have a really good trade, it just throws you off, right? I don't even remember. I don't even know where I was going with that. But oh no, what I was saying is the reason why the Russell's doing so well. I mean, it's not surprising. This is all about trade wars right now, and the equity markets did better on Friday and continued that into Monday because of this thought that the fears of a trade war are overblown. I don't know whether I'm giving Ray Dalio credit for too much influence or not, but he basically had come out and dismissed the trade war thing as just political showmanship. The fact that Gary Cohn has now resigned over this tells me it's a little bit more than just political showmanship. I can see how somebody might think that because there was some confused interpretations that came out a couple days ago when President Trump said something along the lines of, well, we can grant exemptions to Canada and Mexico if we get a fair NAFTA rework. And Bloomberg interpreted it one way and CNBC interpreted it another way. The way that Bloomberg interpreted it was, I think, the more accurate one. The way that CNBC kind of portrayed that headline was, you almost reading it came across as thinking that this was really just a bluster to try to negotiate a better NAFTA deal, and that may be part of it. But I think that the reality is that Trump wasn't going to give them an exemption. I mean, what he was really saying was, if we get a fair NAFTA deal, then the deal that we negotiate with Canada and Mexico takes care of them. But other trading partners are still going to be subject to these tariffs unless they negotiate a different deal. So whereas CNBC was portraying this is just a bargaining chip for NAFTA, I don't think that doesn't turn out that way. I mean, basically, yeah, if he negotiates a better deal through NAFTA with Canada and Mexico, then the tariffs will be off the table for them because they've negotiated a separate deal. But everybody else is going to have to come to heel as well. China and Europe, and the fact of the matter is that NAFTA is the most important thing right now because our number one and our number three trade partners are Canada and Mexico. Canada's number one. You can see that average true range has really spiked today. Excuse me. The open was right around here. When this thing plummeted at the open, you can see average true range had spiked up to about 11. It's just shy of that now. It's about 10. But I want to show you on these charts I've drawn where I think the other tradable opportunities are. So Australian dollar, I don't really see a whole lot. I think the British pound is a good short down to this trend line here, down to somewhere around here. I think the euro is a good short. The euro was hugging along this trend line here, and then it broke through just a little while ago, and now it's trading down to here, and saying it's a good short, keep in mind you can probably short it down to about here. There's a chance that it could come down to here at this price level. These are your profit targets. That would be another level that you could trade down to. Below that, possibly that level there, and this level right here. That would be a pretty big move. I don't know if I expect that, but the euro may not trade a whole big range today just because tomorrow is European Central Bank Day. They'll announce their rate policy, which isn't going to be very important because no one expects them to raise rates. If they did raise rates, that would shock markets and that would shoot the euro straight up. More likely what will happen is that they will announce that they are keeping rates steady and people will be paying attention to Mario Draghi's comments for signs of any change in language, for any kind of signs that they're putting a pin in the ground or putting a pin on the board, a stake in the ground, however you want to put it, as far as when they think they will be exiting their current monetary stimulus policy. The European Central Bank is, I guess, the major world bank right now that really hasn't put that stake in the ground yet. The Japanese yen, zoom out. You can probably trade on strength. Although, now that I look at it, if I do a regression channel, it's still within a downward trend, so you might want to watch out for that. That's kind of I probably should have said traded on strength because overall it's spiked up because of it was a flight to safety spike after the Gary Cohn resignation announcement. I've been drawing trend channels for all the securities that were affected by the Gary Cohn thing. This one right here is the long-term trend channel from the gap down. I should probably color that yellow. No, I'll color this one yellow. I'd say this is a gap down, or not a gap down. I'd say this is a down trade down to about here. Or here. Just depends on how quickly it moves down. Crude oil, we get the EIA inventory numbers here in about 8 minutes. So because we're going to see big moves, which we usually do when the EIA inventory numbers come out, I'm also going to throw a Fibonacci on here to give you some major levels. Oops, what I meant to do. Okay, it's a little squat, but I wanted to basically have this is the midpoint right here. So right now, crude oil is trading right around the midpoint, all right? Depending on, I don't think trend lines are going to be that important initially. If oil comes out and it's a build, then we can see it drop, and it will drop to 61.34. That would be your first target. If it turns out there's an inventory draw and that sends pricing up, then we've got this level here. I'm going to remove these price levels. You've got this level here, and the next stop would be, that's the 38.2, and the next stop, and that's not much of a move. And then the next stop would be here up here around the 23.6 retracement. So we'll probably wind up drawing new trend lines, but these are the trend lines. This one's been broken, so I can notate that. And then this is the S&P. So this is the regression channel. And the regression channel is just, this is from the drop to current pricing. Probably around here is when I set it. A regression channel is just a regression line, which is the kind of midpoint calculated along this price action, and then a parallel boundary, one standard deviation on either side of that. So the idea is that you're going to get some trades out of there, but you're always going to revert to your mean. I shouldn't say always, but the tendency is to revert to your mean. So if I extend that out, that changes the slope of it a little bit. It's a little bit steeper, but you can see our pricing, we're still trading outside of this regression channel. So the point is, if the market is right about where value should be, then it really should be in here somewhere. This spike out of here, yeah. I'm going to take a coffee break, folks. I'll be right back. Just let me know when you're leaving. Mm-hmm. All right. Oh, forgot my coffee. So now we're seeing what I was about to talk about, I was about to start saying, and now the market's showing us this, is the theory behind this regression channel is the tendency is to come back into this area. Now it might take a while. I mean, we could trade out of here for a while. If it's an upward sloping one, when it comes back in the channel, that may be appropriate value, which could be a little, which conceivably, if you look out far enough, could even be even higher than where we are, today. So the fact that we've gapped down and that this is an upward regression channel tells us that yesterday's gap down was probably an overreaction. At least that's what the market perceives. And the market is nothing more than the sum total decisions of all the people who are trading this particular market. In this case, the S&P 500 futures, but equities, U.S. equities in general, because all of them are showing this same pattern. The Nasdaq, the Russell's a different pattern because it's really been. This is the way it's going to affect your big multinationals. So it probably would be appropriate to draw an updated regression channel. This old line here is helpful to have because it does serve as a target. Because right now the Russell's well above the high of yesterday. So what we're going to see now if this will continue. So the Russell today is probably a play on strength. I wouldn't get into it right now. I would wait for a pullback. Relatively speaking, if you're a pairs trader, you could buy Russell, sell Dow. So this is looking like a good level of resistance. So, and I don't like to play counter trend rallies, but that might be a good short. Gold. spiked on the news, as you'd expect a flight to safety asset to do. It's now filled that gap and then some. I couldn't tell you why that is. The dollar strengthening. Copper, I would expect overall to, in the face of trade wars, and it's been trading down on trade war concerns. If you look at the day chart, you can see tariffs were announced. I don't know what day it was, but Wednesday would have been the 28th. So it was already on the decline anyway. So right around here is when tariffs were announced. They didn't affect copper directly, but the idea is a trade war is going to slow down economic growth. If copper is a barometer for the health of the global economy, then there's not going to be as much copper demand if there's a slowdown. And this is the 10-year Treasury. So coming right down, trading down to the bottom of this trend line. So this could be a bounce. Could be a bounce off of there. The dollar index is up. The yield is down 10 basis points. So 0.1%. Oh, I completely missed the EIA number. So I'm guessing there was a build, or not a build, I'm sorry, a draw. Because oil has traded up. The number came out right here. And we're traded up to the 23.6. And let's see what the number was, because if the draw was large enough, that could be very bullish for pricing. Initially it was. A build of 2.7 million barrels was expected. A build of 2.4 million barrels was reported. So the build was smaller than expected. That's really what that's all that's really telling us. So now, in the cash markets, the Russell's already been positive. The NASDAQ and the NASDAQ Composite are moving towards that, and they are doing as well in the, I shouldn't say they, because there are no futures on the Composite. There's futures on the NASDAQ 100. Those are moving towards positive. So right now, it's just the Dow and the S&P that are still negative from a cash markets and a futures perspective. British pound futures may be struggling with a decision. Not really agreement across time frames. I mean, we just got a 4-minute stochastic bullish cross on the 4-minute chart. The 1 hour is looking bullish. The 15 minutes looking a little weak. And by that I mean indecisive. So that's a difficult one to read. Now if we look at the euro, yeah, still very mixed signals. Mildly bullish from here. But really, I think the overall sentiment is bearish. I mean, this is the 1 hour chart. That's not painting a pretty picture. Now the S&P is in an interesting place. Okay, I drew a trend line, so I don't know why. What this is. Or I should say I drew on a regression channel.